Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, September 29th, 2020. One day before the end of the quarter, the eve of the presidential debate that's coming this evening. I guess the afternoon prior, but whatever. Obviously we've got a lot to be thinking about here. It's kind of funny. I took the day off yesterday, and I really tried to stay off phone, social media, etc. And one of the few things I saw was pre-open, an alert from Bloomberg just with sort of the outlook for today, or the big news stories of the today, and it was COVID worsens, presidential tax turns out, a whole bunch of other things, and so I just quickly took a peek and said, oh my, the futures must be getting clobbered this morning. And of course they were up about 40, and that's pretty much where they stayed yesterday. So it's clear that the markets really are in one of those frames of mind where they believe what they want to believe. One of the big thoughts yesterday was that stimulus is better because the House is close to approving a new stimulus package. But bear in mind, the House has had a stimulus package approved for the better part of 3 months, and no progress has been made. So I wonder how much of that optimism is real versus how much of it is just part of the bounce. Bear in mind, and it's too early to say that we're in a bear market or even really a full-fledged correction, but bear market rallies, and I've said this before, bear market rallies are short, sharp, and furious. And what we saw Friday and yesterday were bounces off of longer-term moving averages, more or less the 100-day moving average, although it wasn't quite there in some cases. But I'll put up charts for SPX and NDX to show you more or less where we were. And now we're kind of bouncing back to the 30-day moving average, looks like the target on the upside. If we breach that, well, then this was a rally, a reversal. If we bounce off of that to the downside, well, then this was, markets finding their trading range and finding a bounce. The move over the last couple of days is not all that surprising, because I saw statistics showing that there were record shorts now put out by speculators in ES and NQ and related futures. Those shorts tend to get covered. When a trade gets that crowded, it usually starts to reverse itself. Speaking of crowded trades, another one that people are starting to really talk about, and I will take a little bit of a victory lap here and say, if you've been following along, you've heard about it here first, because I wrote about it a week ago, Friday, the 18th, about how November VIX had started to creep above October VIX, and how that didn't portend good things, because October VIX is actually the election period. And I said, either it impacts electoral chaos or some sort of contested election. But what I mean by electoral chaos? Some sort of contested election, or that if the Democrats run the table, you could be looking at a capital gains tax increase, and that in and of itself would be a catalyst to selling. And we've talked about it since then. And this morning I was watching TV, and there's all kinds of talk about how markets are pricing in electoral chaos, and some smart strategists, many of whom I respect quite a lot, saying, well, this is when you have to fade it because the vol is expensive. Take a step back here. I was a trader for 20 plus years. And when you're making markets and options, your nature is to sell something that's higher priced and hedge it with something that's lower priced. So the trade might be, from a reflexive point of view, sell that November premium in VIX, which is really the December period in the options. There's a reason why you better think twice about doing it. First of all, I'm never going to come on and recommend. First of all, I don't make recommendations, but I'm never going to come on and tell people just to sell volatility outright without a hedge, because that could be a very expensive trade unless you're really well set up for it. My comment on this is, you better understand all the reasons. If people are on there saying that, well, the market's overpricing electoral chaos, it very well might be. It very well possibly is. But it's not necessary. But remember, there's a flip side to it. If there's no electoral chaos, it's likely because there is a landslide Democratic victory. And if you have a landslide Democratic victory, you're going to start hearing people talking about capital gains tax increases. That's the logical next step. Biden has been very clear about his intent to try to get the capital gains tax increased and roll back a lot of the corporate tax rate decreases that we saw in the 2017-2018 tax cut law. And so markets aren't going to like that prospect. As I wrote at the time, neither is a market-friendly outlook. So it's not surprising to me that people are seeing the volatility. I am a little surprised that a lot of very smart people are not seeing the other side to this potential trade, which is that you're, depending on how you do it, kind of damned if you do, damned if you don't. Now, if the market is looking ahead to stimulus, what this probably means, if you get the blue wave, so to speak, is that you're almost assured to get stimulus, but that won't be till January or February of next year because they won't have control of the process until then. And I really highly doubt that a lame duck Congress would approve any stimulus, particularly a lame duck president if that becomes the case. So the time to do it is either now, before the election, because elected officials like giving money to their constituents. It's a pretty good election. It's historically been a pretty good election strategy. Or you're going to have to wait till February at the earliest. So bear all that in mind when you're making your investment decisions. And bear in mind today that as we're moving sort of sideways while we're taping this, we've had some ups, we've had some downs, that we haven't really, it's too early to say whether the movement, the bounce that we saw in the last 2 days is a reversal or just a bearish market. I'm not going to call it a bear market rally, but a bearish market rally. Well, time will tell. Take care, everybody. Bye-bye.